Can you hear anything? Is that all right? Okay, here we go. Away we go. Well, welcome. You're listening to The Best of Investing on Talk 910, the show where we present valuable information about real estate, the financial markets, and other economic business of the day. I'm your host, Edward Brown. I'm proud to house my co-host, Mark Hanf of Pacific Private Money, California's fastest growing mortgage investment firm, Patti Cohen of Pacific Union Realty, and financial and investment advisor Mike Zalin of Madrone Investment Advisory. Boy, we're covering the entire financial gambit with these three co-hosts. Let's see, our phone number is 888-912-1190. Now use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. Now the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. The vacations are free. Their only request is a $75 cleaning fee to cover the housekeeping expenses. Today's trivia theme is evil dictators.
Ooh.
And we didn't make it really easy, like who's the one with the funny mustache, stuff like that. Our website is bestofinvesting.com. Check us out on television, Comcast Channel 26, AT&T Channel 99, Saturdays at noon, Sundays at 6 p.m., which, by the way, we've been getting some feedback from people who kind of stop us on the street and go, I saw you on TV. I said, you sure it wasn't in the post office on the wall? But that's okay. Okay, let's get right into it. Now, Mike, before the show, you were starting to show me an interesting article. Let's get right into that.
Sure. Well, I was quite surprised to read this article. It's titled Housing versus Stocks, and it starts out with the question, is a bigger investment in housing better than buying the S&P 500? And then it basically says that the Carl Case Robert Shiller Housing Price Data is the most widely respected and used long-term housing data series for domestic single-family owner-occupied dwellings going back to 1889.
Wow.
And then says, with great clarity and robustness, these data demonstrate that equities typically deliver far higher returns than housing. And goes on to show that over the last 123 years, and this was through the end of 2012, so it's probably changed a little bit since housing's gone up so much, although the market's gone up too. But it showed that over the 123 period ending in December 2012, that as a real rate of return after inflation, housing had been had an annual rate of return of about 0.2% a year, whereas the S&P had an average return of 6% a year. So it was quite dramatic.
Well,
I was pretty surprised.
And we're all old, around the same age, and we're old enough to remember, and I remember that really before the 1970s, housing appreciation was pretty banal. I mean,
Yeah,
if it went up 2, 3, 4% a year, that was a lot. I mean, my dad's first home that he bought in San Anselmo, he paid $10,000 for it, worked on it for 2 years, improved the heck out of it, and sold it for $12,000. And so he really
That's a 20% return.
And that was in 1964, 65.
Yeah.
And my dad being a builder, I remember when he was building homes, and all of a sudden in the 70s, prices went from $25,000 to $50,000 to $75,000, and people were freaking out. So it wouldn't surprise me that if you go back 100 years, you could say, oh yeah, stocks have outperformed real estate over 100 years. But I wonder if you went back 40 years.
Well, interestingly,
let me add one extra thing to that is, if you don't live in a house, you got to rent. You got to pay rent somewhere.
Exactly.
So I'd like to see the adjustment for that also.
Exactly. And so these are just nominal figures. I don't think they take into account, obviously, the tax benefits, many of which you have far more in real estate than in, say, stocks, potentially. But interestingly, just to get back to Mark's point, they do break it out into the last 40 and 50 and 10 years. And
so really?
And over the last, and again, this is nationwide, though.
Now, this is but they stopped at 2012, though, right?
End of 2012.
Okay, so some good
missing
stuff
a little,
happened.
a couple of years.
Well, okay, but the stock market's gone up since
That's
then.
true.
So,
That's a good point.
And
Fair enough.
nonetheless, go ahead.
And really, what he was about to say is nationwide.
Exactly.
I'd like there's 2
that's
planets and there's 2 countries here. There's
Exactly.
the Bay Area
Okay.
and there's the rest
Everywhere
of the
else,
country.
yeah.
So maybe what this testifies to is that all real estate is local, ultimately.
Yeah.
But to the point of over the last 40 years in nationwide, those numbers don't really change. The S&P return actually goes up to about 7.5%, and housing, individual owner-occupied housing goes up only about 0.5%. But the article does make the very important distinction that says the returns are different for people who own single-family dwellings to live in and those who purchase and then operate houses as rental units. The latter are involved in the difficult work of identifying an attractively priced local house, acquiring it at a good price, converting it into a rental, and managing the unending day-to-day tasks of the successful landlord. This holds the potential for more attractive returns.
Okay, and
That's the distinction.
And it's funny because I remember, talking to people who, say, oh yeah, my house was a fantastic rate of return investment, besides just living in it, when they purchased in, 1969 for $40,000. But then you start looking at forget the inflation, just look at the time value of money. And if you were to ask them, well, what rate of return do you think you got? Oh, I probably got 25% a year. And when you start doing the return, it's more like 6 or 7%.
Absolutely. And then also, we talked about, well, this is nationwide versus
Exactly.
Bay Area, and also, real estate investing, it is a contact sport, and not everyone does it well.
Right.
And so, in my career, I make loans to real estate investors, and so I tend to see and work with investors who actually know how to make money. But there's plenty of people out there who've managed to lose money time and time again with real estate investments, just like I've managed to lose money on every stock I've ever purchased. So, hence, I stick to real estate.
I've got a client who comes in every year. We do his tax return, and he loves the stock market, but gosh darn it, if he doesn't have net losses every single year. I said, okay, just understand that if you're doing this for a hobby, it's like gambling. Really, seriously. I said,
Exactly.
it's great that you've got $40,000 of capital loss carryovers, but I sure would love to see you win sometimes so that you can offset it.
I bet if these numbers were for the Bay Area, they would be radically different. I believe that in the Bay Area over the last 40 or 50 years, single-family homes have gone up, I think, 7 or 8% a year, compounded. Because as you were saying, Mark, and your story is not typical. People were buying homes in the 60s here for $25,000 that are now worth $1 million or $1.5 million.
And here's the other thing: is that generally speaking, when you buy a house, you don't pay all cash.
Exactly.
So your rate of return on your investment,
The leverage,
leverage is, because usually with stocks, I mean, the most you can leverage is 50% margin. Most people don't even do that.
And to Mark's point about, or your point, Edward, about how investors may not, there are some investors for whom this would work and some for whom it wouldn't. The stock market studies show that even though the S&P may have gone up 6% on an inflation-adjusted basis, the average investor only made 1 or 2% because they would get in at the high and get out at the low.
Yeah, good
And so
point.
that's what all the studies of stock market returns show. And so again, just like many people were buying houses at the peak of the market but not buying them at the low, it's about the individual investor.
So what did we learn from all this? Put your money in a mattress. Go ahead, Mark.
Yeah, well, and it's interesting because when I was in college, we had a couple of speakers I remember, and this was 1982. If you had $100,000, how would you invest it today? And one of the speakers was someone who was an expert in real estate investing, and the other one was a financial expert in stocks. And so they both had some very diverse opinions. And I think that would probably hold exactly true today if you had those same or similar type of people today discussing if you had $100,000, how would you invest
Well,
it?
it's the same one where you talk to an expert on the witness stand who works for R.J. Reynolds, and he says, yeah, smoking's not bad for you. I've got scientific proof for it, So
Exactly.
I mean, like, for example, personally, I know for my $100,000, I wouldn't invest it in real estate or the stock market. I would lend it because I actually know how to make money lending money. So, but I'm lending it actually in or on real estate.
Yeah.
So I guess that's kind of the same thing. So I like real estate as investment and continue to like it into 2015.
And especially with the stock market, there's 2 deadly killers, beginning with an E: ego and emotions. False sense of confidence, when the fear of and sell, and then the confidence and you hold. And people are novices. And that's why I stick to real estate.
Which is why I go back to the 1% situation. Yeah, because real estate, you don't get in and out that quickly.
Exactly, and that helps the long-term investor, is not being able to get in and out. But Patti, you've been an agent here in Marin for 25 or 28 years or so. And do you think that the real estate prices in general for single-family homes have more or less gone up about 7 or 8% a year overall in the time you've been here, at least in Marin?
Yes, because there's very specific cycles in the Bay Area, and life cycles with like anything in life. And we're on an upward cycle right now, and in fact, the appreciation in Marin in the Bay Area was 8.9% in the last year.
So if you think about it, first of all, you had interest rates that were really low, and you got some tax benefits on it. most people leverage what they put 20 or 30% down, let's say, or even less. I mean, the rate of return on that money, adjusted even for the taxes, or especially adjusted for the taxes, gosh, that's got to be 15%.
Right, and then the all-important leverage, like you mentioned, that's really important. I mean, people can still today get in with 2 or 3% down.
I wonder if some of the banks will come up with shared appreciation. You know, I know that there are some lenders who do that, but I wonder if banks, I don't know if they'd be allowed to.
Well, you can get down payment assistance where if you have 10% but not 20%, you could have, there are companies that will provide the other 10% of a 20% down so you can get the best first mortgage, and then there's no payments on their 10% except they have a part of the equity build in your
There's got to be a limit to how long that the loan can stay in existence. Or maybe they just assume people move every 5
You would think so, yeah. I don't know
years.
that would be interesting.
Edward, I really like your point about the fact that in real estate, you've got to live somewhere.
Yeah, exactly.
And whereas with stocks, you don't have to own stocks. But if you're already, in a sense, you have to pay a price just to live in a home.
So then it's really the incremental.
It really is, and that's an important distinction.
Okay. We're going to cut to our first commercial break here. The theme is evil dictators. Who was, okay, these questions are not quite as easy as you think. Okay. Who was the dictator and leader of the Khmer Rouge and led his successful rebellion against the Cambodian government? The first, and you will, once if you don't know this, once they say the name, you go, oh, I've heard that guy before. The first 3 callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Who was the dictator and leader of the Khmer Rouge? That's spelled Khmer and then Rouge. And which, by the way, I know some people who actually escaped from Cambodia and very, very evil dictator. All right? Stay with us. Best Investing. We'll be right back.
Maybe we should change the name of the show to Bloody Dictators I Have Known.
That's a
The
good
Vietnamese
segment.
name I know is Ho Chi Minh, and I have no idea who that was.
He was a cook at the Vietnamese.
I know he's got a city out there somewhere, Ho Chi Minh City.
Yeah.
I remember that from
Well, he
MASH.
was a very renowned cook.
Yeah, that's right. And holy smokes, wasn't he another one?
Edward, we've got to get you away from dictators and war.
I know.
You know, I mean, like,
It's
let's
exciting,
get back
though.
to TV shows and
TV
sports.
show, you want the easy stuff? Okay.
I'm a dictator.
See, what I do is I like this one because it's like 16 gigs, so I keep erasing ones when it gets starts to get full, and then I'm wondering why I can't find stuff on there. But that's okay. I mean, I've got it saved over. This is going to be February 7th.
So anyway, I was
Seven,
shocked.
that's
I was
okay.
shocked to see this article because
Yeah.
I grew up here and I thought, oh, come on, real estate
Yeah.
goes up. Come on, it's
Always
better than
goes
the
up.
stock market.
Oh,
Well, you got to
Which I
balance.
actually believe it is around here, actually.
Got to balance out Detroit, places like that.
yeah.
The country is bloodbath
stuff.
with real estate. I mean, people will stay in their house for 20 years and they get 12,000 equity in their house. I mean, the average. I remember a few years ago, the average price nationwide was under 50,000.
I don't think it's that much higher now, is it? I think it's probably 200.
It's crazy.
And you drive 100 miles from here, and houses are $80,000 or so.
Yeah. I wonder how much my tent's gone up.
I thought you had a yurt.
A yurt.
Yurt, yes.
Yeah, the yurt.
That's
Those
so
are
awesome.
great.
Pretty cool.
Do you really have one? Oh, okay.
I
Wow.
almost bought some for Lighthouse.
I have a tent. No, I'm just kidding.
Okay. You got some fun stuff?
Yeah.
Okay.
I mean,
Kind of
what's it?
dovetail right in there.
Okay.
All we ready. Are you doing ready, Teddy?
Ready, Teddy.
Let her happen, Captain?
Better have it, Captain.
Yeah, here we go. Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host Mark Hoff of Pacific Private Money, Patti Cohen of Pacific Union Realty, and Mike Zalin of Madrone Investment Advisory. When we cut to the first commercial break, we asked this trivia question about evil dictators. And this, of course, is my personal opinion that these people are evil, which I think most people would agree. Who was the dictator and leader of the Khmer Rouge who led a successful rebellion against the Cambodian government?
Mark?
No.
Pol Pot.
Pol
Oh,
Pot,
that's
that
right.
is
Wow.
correct. Very good. And you didn't even look that up on the internet.
Me and bloodthirsty dictators go back a long way.
Yeah. Okay, actually, Patty, just before we get into you here, we announced that last week we were going to have for this week another special trivia contest where the winner is going to get an overnight stay at the Beachcomber Motel, which I don't know, it's up in Fort Bragg. So if you're heading to the Mendocino coast, check out the Beachcomber Motel and Spa, and they also have the Surf and Sand Lodge, and also have the Beach House all in Fort Bragg. Experience in-room hot tubs, fireplaces, and ocean views with decks in one of the finest destinations near Glass Beach. Haven't been up there. Gotta check that out. So check them out at beachcombermotel.com, surfsandlodge.com, or beachin.com. So here's the question. Where is the question? I know the question's here. Here it is. Okay. What do most people do on Mondays more than other days of the week? Now, here are the rules. We need to have you email Edward at bestofinvesting.com by midnight tonight the answer to that question. And from among the answers we receive that are correct, we'll announce the winner next week. And please, no previous winners on the Best of Investing. Okay, Patty, what good stuff do you have for us?
Well, what we're seeing is a lot of foreign buyers, and we've talked about that.
We do, yeah.
And in fact, most of them are from China.
Okay.
And here's a statistic. The buyer pool in Atherton, 75% are foreign buyers.
Now, Atherton's
Atherton,
expensive in an area.
very expensive.
Yeah.
And in fact, most of them are from China. And there's a holding company, China Ocean Wide Holdings. They bought last year properties in Atherton for $21 million, $25 million, and $30 million.
All cash.
Cash.
Wow.
Right. And that same company tried to buy one, the former owner of Netscape, Jim Clark, for $41 million, didn't get it. But they're also building right now, this same company, China Holdings, they're building a 910-foot skyscraper in San Francisco, which would be the tallest building, the second tallest building in San Francisco. So that, most of the investment would have been in China, but they're doing West Coast. Some things in LA, but mostly Bay Area, West Coast.
Interesting.
Yep.
Wow.
And not as much Russian money as we used to see, but a lot of Chinese money. And and they're buying single family residences.
But what are they doing with those expensive homes? Are they moving in? Are they renting it?
Certainly not cash flowing them.
Yeah.
Wow.
I mean, some of these, I heard some sale recently, someone bought a 1.78 cap rate.
Wow.
I still can't fathom that. I think that's about the lowest I've heard.
Maybe those Atherton properties are on Airbnb. You can rent it for $20,000 a night.
Yeah, really. We've run into that before. Well, that's wild, all that money coming in. I do have a little article here. I mentioned a little bit of this last week, but I wanted to get into it more. So it says here, something extraordinary happened this month. Interest rates turned negative in Germany, Switzerland, and Japan.
Is that when they charge you money
give it
to
away.
hold your money?
Basically, yeah. It says Europe's bond yields fall to their lowest level since the Black Death. That's, I think, an encouraging thing. So basically, it effectively what happens is you give them your money, but you have to pay them to hold it. So you're really better off putting it in the mattress. Where you can
So
get cash.
then you have to wonder why are they doing that?
Why are they doing that, Mike?
Well,
You're quite the economist.
Usually, as an investor, you make the best choice of your available choices. So we can only assume that the alternatives are possibly worse. That they expect rates to go down even further.
Further than
wanna
negative zero?
Well, if they're minus, say, 0.1% or so.
Yeah.
Well, why can't they be minus 1%? So maybe they want to lock in a great rate while they can.
I guess
I don't know.
You definitely want to go outside the country.
Yeah.
I mean, of course, the thing is, I still
If you
remember.
could.
Well, I've told the story before. I remember in 1988, I think it was, I was down in Rio de Janeiro, and interest rates here were probably, I don't know, about 9% or something. And they said that if you wanted to invest in their bank, okay, so it wasn't just some guy dealing on the street, it was in the bank, you could get 19% interest a month.
Whoa.
It's like, wow, that sounds pretty good, but I think I'll just kind of watch because I'm thinking if the value of the Cruzado, that's their thing, goes down, then I said you can get smoked. So I watched it for a year, and sure enough, you know, forget your 240% interest you earned. It went down like roughly, you know, a third of that. I mean, basically, you would have lost money in converting it to.
You know, even The Sopranos maxed out at 18%.
Exactly. Okay. You know what? I think what I've got a couple of emails here we received. Mark, one here is how quickly will I earn that great interest rate of 8% if I invest in your fund?
So I'm the broker and president and owner of Pacific Private Money. We're based in the Bay Area here, and we are a private money real estate lender, and we use private capital to make our loans. So the questioner was asking about an investment product that we have, which is the Pacific Private Money Fund. It's a private placement fund, for those of you who know what that is out there. It's an alternative investment form that many people will use to, as they diversify their investment holdings. Some people diversify by owning some stocks, some bonds, some real estate, maybe some gold, other things. Trust deeds and mortgage pool funds are also growing in popularity in the last 10 years, largely because of the very, very low interest rates, the stubbornly low interest rates that you've been getting on banks and CDs. So people have been looking to real estate secured products like trust deeds and mortgage pool funds that have been really consistently paying 8%, 7, 8, 9, even 10%. There are funds in other parts of the country where private money rates are even higher than they are here in California and in the Bay Area that pay double-digit returns to their fund investors. So the question was, how fast would you start earning the rate of return that we've been talking about on this show? And so in 2014, the Pacific Private Money Fund paid out 8.14% to its members and shareholders. And so while past performance is not a promise of future results, we have every reason to believe that around that rate in the low 8s is going to continue through 2015 based on the loans we're making now. And so when we get new investment capital, in fact, this week had an existing investor walk in and deposit $175,000, an increase in his fund membership. And when we collect money from a new investor, it goes into what we call our subscription account, and there it sits until we need the money for a new loan, to fund a new loan. And the reason, and while it sits in that subscription account, it earns nothing. It earns zero. So it could be in there for a day, it could be in there for a week, it could be in there for a couple of weeks. It usually isn't in there beyond more than a couple of weeks because we've got a lot of loan funding activity going on in our company. But the reason for that is we don't want to dilute the yields of the fund for the existing shareholders by putting in lots of new money that sometimes can come in large chunks. We want to wait till we can put that money to use. And so,
yeah, because that wouldn't be fair if suddenly someone says, "Hey, this sounds really good. Here's $1 million," and if you can't place it and it diluted everybody, that wouldn't be fair to the existing shareholders.
Right. So, and it wouldn't be a huge dilution based on the size of our fund, but still, I mean, if you're expecting, month in, month out to be earning what amounts to an annualized rate of around 8%, and all of a sudden it goes down to 5% because we put in $1 million and it sat there earning its pro rata share of interest. So anyway, so they're designed. These funds are designed so that yields are not diluted. We've been pretty consistent. In fact, our month by month has been very, very consistent in the fund for the last year and a half.
One thing I like also about the fact that you don't dilute the shareholders is it also doesn't put the pressure on you to make silly loans, right? Because if
absolutely,
otherwise you go, oh, quick, I gotta just get this money out so that everyone is back up to 8%.
There are different funds throughout California, and I know a lot of the fund managers because we go to a lot of the same conferences, these private money conferences that we have throughout California, and there are some funds that have actually tons of money sitting on the sidelines. There's one in particular in Southern California that I know it's about $100 million fund, and the last time I saw him, they had $25 million sitting in their subscription account on the side, and those investors were earning nothing on that. And so they were desperate. They were asking me, "Do you have any loans that you can't fund that we might want to look at?" So they were desperate for product. Now at Pacific Private Money, we're blessed with some really, really good deal flow, and we don't have a $100 million fund. Our fund is below $10 million right now, and our loan volume is such that we keep that money active all the time. And
So
funding
that's actually
short-term
that
loans.
actually then is an advantage that your fund is a smaller fund.
Lean and mean.
Yeah.
It's lean and mean, very, very efficient. For more information about how our fund works, and we have lots of information that we send to people. I typically get a number of responses when I get to my office every Monday after the show. People who have heard about, whoa, 8%? How do I find out more about that? So for information about how our mortgage pool fund operates and how you might participate, give us a call, leave a message, or send us an email. The phone number is 415-883-2150, or just send us an email, info@pacificprivatemoney.com. Again, info@pacificprivatemoney.com. And you can always go to our website, which is also pacificprivatemoney.com.
All right. We're going to get to our second commercial break. When we come back, we have a couple of interesting emails for both Patti and Mike that we're going to, when we ask about, for Mike, it's going to be diversifying, allocating investments within 401k, an IRA, and a Roth IRA. So audience, you're going to want to listen to that. And then for Patti, the question is going to come up about buying a new house when you haven't sold your old one yet. What do you do? So good stuff coming ahead here on the Best of Investing. Second commercial break trivia question. Evil dictators is the theme. Who was the 15th century Romanian dictator who Dracula is probably fashioned after? Okay. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. This guy was a 15th century Romanian dictator, and Bram Stoker, right, wrote Dracula, based it on this Romanian dictator. Who was this evil dictator, all right? Stay with us. The Best of Investing will be right back. Okay.
I think I know that one.
You think you know it? Don't say anything.
I won't.
Very, 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 very evil.
That was my first one. No, I'm just kidding.
Yeah.
No, I just have one wife. Sorry, sweetie.
That's right. Yeah, ex-wife in trunk. Right. You ever seen that? You ever seen a bumper sticker? Ex-wife in trunk.
No.
No, you haven't.
Baby on board, ex-wife in trunk.
Well, when a police officer pulls you over, if they're really smart, they say, "Do you know why I pulled you over?" Instead of telling you why they pulled you over, just in case you want to confess that your ex-wife is in the trunk.
Yeah, exactly.
It's a real, open-ended question.
Yeah, it's funny. I remember getting pulled over for something that I was going, no, this isn't right. And it was, trying to be very respectful. And
It helps.
yeah.
At least 5 miles an hour for your ticket.
yeah. But it was basically, he said I went through a stop sign, but actually what had happened was the guy who I was following was going about literally 10 miles an hour, and he had stopped in front of the white line, and I stopped behind him, behind the white line, but it looked like we both stopped and went together, right? He actually kind of went too far. So the guy pulled me over, and I was basically explaining this to him, and he still decided to write me up, and I said, well, go ahead, do what you need to do, but we'll let a judge decide. That's fine. And so, I literally the next day I went out there and I started taking pictures and all that, and and I realized he was lying in wait because where he was hiding in the bushes and stuff like that. And anyway, so I took all kinds of pictures and I had this whole thing written up. I never got the thing. The guy, basically, even though he wrote it up, he must have either dropped it in the water or ripped it up or something.
But I never did. So I never.
And I even called. I said the police department. I said I still haven't gotten this ticket yet. They go, just wait. After a year, it goes away. So
Wow,
all
that's
that
good
work
to
I
know.
did. Yeah.
Well, he probably just didn't want to have to deal with your rapier mind.
No, I wasn't trying to be mean. I was trying to be nice to these guys. I didn't want to get taken in handcuffs for
Resisting
attack.
arrest.
Yeah, exactly. It's like
Now it's even
because they
getting
can
bigger.
just make up anything they want, and there's really nothing you can do about it.
True.
Okay. Welcome back to the Best of Investing. Again, Edward Brown, Mark Hahn, Patti Cohen, Mike Zaidlin, Hike. Here we are. Okay. Let's see. Trivia question number Ooh, evil dictators. Mark says he knows the answer to this one. Who was the 15th century Romanian dictator who Dracula was probably fashioned after?
I think his friends went by his nickname, Vlad the Impaler.
That is correct.
Very good.
You're the man. How do you know this guy? Huh?
Oh, he left his mark. I saw a couple of movies. You see the fence leading up to his house had all these poles with little heads on them. It was very nice.
Very nice. I think I went to England. I think they had a little shtick on him. All the evil torturous devices.
You didn't want to make him mad.
No, don't make him mad. Okay, so we have a couple of great questions here. We have very smart listeners, and they come up with great email questions. So, Mike, we got one here for you. It says, I have a 401k, an IRA, and a Roth IRA. How is it best to allocate the investments in each one?
Well, that's a really good question, because that's a very important question. So much of the time, people look at their investments and say, oh, I'm getting 8% or 6% or whatever percent it might be, but they're not looking at what the after-tax returns are. And the after-tax returns are all that really matter. It's what you have, not what the government has, that's going to make a difference in your life. And so if you are fortunate enough to have the three distinct types of accounts that each have different tax treatment, meaning a tax-free Roth, a tax-deferred IRA or a tax-deferred 401k, and a taxable account, which I'm not sure if that question addressed that, but let's just take
Probably,
it and run with it anyway.
everything, sure.
Because most people do also have a taxable account.
Yeah.
And you have a choice. Let's say you want to have a 60-40 stock bond, fairly conservative portfolio. And again, we have to assume a certain marginal tax bracket because, again, it's the tax bracket that's going to determine how much you're going to keep, along with the type of tax treatment in the account. So generally, if your marginal tax bracket is, say, 30% or so, somewhere around there, that means that whatever's in your taxable accounts that is taxed as ordinary income will be taxed at that rate. And so you have to say, well, my bonds, how are they going to be taxed? Well, assuming you don't have tax-free municipal bonds, you're not in that high of a bracket, but you have ordinary bonds, you're not going to really probably want them in your taxable account because they're going to be taxed at a pretty high rate. That's all ordinary income. In contrast, if you were to keep, let's say you have an S&P 500 index fund that doesn't turn over much, and you're going to hold it for the long term, you basically put that in your taxable account and you've got a tax-deferred investment because there's going to be very little turnover, maybe 5 or 10% a year. The gains, the capital gains, you're not selling it, so at least for many years, so that's deferred. And the qualified dividends that are kicked out every year are taxed favorably, anywhere from maybe up to 15% or so for most people, but many people won't pay anything on their qualified dividends if they're in one of the lowest two tax brackets. So, for example, a married couple with taxable income under 75,000 or so would not pay, generally probably not pay tax on their qualified dividends. So essentially you've turned the taxable account by utilizing equities and stocks into something resembling not quite a Roth, but something where you're really getting the benefit of the favorable tax treatment. Whereas if you'd put bonds in there, you'd be paying about 30%. Secondly, equities tend to get most of their return through capital gains, whereas bonds tend to get the great majority of their return simply through their yield, through the ordinary income. So you don't even get the opportunity with bond funds very much to even take advantage of the capital gains treatment because there really are very few long-term capital gains with bonds, unless you just happen to have been lucky and bought them at a time when bond rates went down and therefore bond funds went up. But historically, people buy bonds to get ordinary income. They don't buy them for capital gains, whereas stocks are bought for capital gains as well as, I think, historically the percentage of the capital of a stock's total return tends to be about 65% capital gain and 35% dividends. Both of those are favorably taxed. So that's another reason you want them in your taxable account generally and not in your IRA, because anything in your IRA is going to be taxed as ordinary income. So you wiped out any of the tax advantages of having stocks and bonds, and their dividends in there. And in the Roth, I'll just address the Roth. The Roth should generally, because it's tax-free, contain the asset with the highest total return. Okay. And that's usually going to be an equity fund of some sort, because all that will be tax-free. So if you have to allocate it, that's what you probably want to do. Those are the general guidelines.
Okay, I was going to say, because even if you have stocks in there that have capital appreciation, even if you don't get the tax, the capital gains tax benefit, the whole issue there is if you have a huge total return, it's going to come out tax-free.
Exactly, and that's so now most people can't quite precisely allocate things this way because either they have a great majority of their money in one of these three accounts, typically in a 401k. But those are the general guidelines. For most periods, it would work pretty well, and at the very least, they should be paying attention to it. I've seen portfolios where people had tax-free municipal bonds in their IRA.
Yeah, I wonder how that happened.
Yeah, I wonder how that happened. Or I've seen people who bought variable deferred annuities in an IRA. So you're getting a deferred tax treatment from the annuity, but you're already in a tax deferred account. It's the equivalent of wearing two raincoats.
Yeah.
So,
But in that case, you're probably paying more in fees. Which
well, that's
are really
another issue
effectively-
with those annuities. But anyway, those are the general guidelines.
Okay, so I'm sure that some people are going to have some questions about this. I know I do. I got some
Say
more
what?
questions for you. So how do people get a hold of you?
They can reach me at 415-785-4585, or our website is madronellc.com.
And Mike doesn't charge for any questions you want to ask him, so now's the time to get some free advice.
Limit of 500 questions.
Yeah, I like that.
Free advice, the best advice.
That's-
Well, the cheapest advice. Anyway.
Exactly. Okay, so Patti, question for you. It says, I want to move, but I'm concerned about buying a new house when I haven't yet sold my old house. Any suggestions? I mean, that's a pretty common question, I would think.
This is the biggest real estate question, and I'm in a more of an emotional business.
Yeah.
So part of the first question is, can you financially do it or not? And most people can't. I don't know the percentage, but a lot of people just can't. And it's always that, feeling of being on a cliff and having to jump. I've sold my house and I have nowhere to go. And people are afraid of that.
Yeah.
So I would say in a seller's market that like we're in right now, it's the old adage, if you build it, they will come. If you list it, it will sell.
Okay, versus the buyer's market where you say you can make contingent offers.
Oh, yeah.
Selling, yeah.
In a buyer's market, you might have your house on the 9 months on the market. Are you going to go buy a house and hold yours for?
Yeah.
Buying's easy in a buyer's market.
Yeah.
So you really want to, and in a buyer's market, you hope you're going to find something, but you typically do. So you want to get your house sold first. But in a seller's market, I say the more comfortable way of doing it, emotionally comfortable. If you can financially do it, I would say do it. To me, that's the more comfortable way of doing it.
Yeah.
For a lot of people, they just freak out thinking, I can't hold two big houses at once. I just will go crazy. It's just wrong. You
I did
can't
that
do
one
that.
time. It made me a little anxious for a while.
Remember.
Yeah.
And so I mean, but to me that's more comfortable, emotionally comfortable. You know where you're going, you close on your house, you have the comfort of moving, you move out, you stage it, it's going to sell in a week.
And worst case scenario, you sell your house and you can live in an apartment or a motel if you had to.
Or you could just lower the selling price a little if you really wanted to get a quicker sale. I guess.
Yeah. And what we typically do is a rent back. We'll rent back. I mean, you put it on today, it's going to go in 2 weeks, and we're going to have a 30-day close. Now, if it's priced correctly, and if we get multiple offers, then you can claim your terms. So that's when you say, okay, the seller wants a 60-day rent back. Now you've got a total of 120 days on the market, or 90 days on the market. You're going to find something.
Or
Get a bridge loan.
get a bridge loan.
From Mark, I
Yes,
was going to bring
exactly.
that up.
From Pacific Private
So
Money, you
you've
can get
done
a
that.
bridge loan.
Yeah,
So
you've done
first of all, nobody wants to move twice. Let's be honest
Yeah.
with you.
Yeah.
My wife would kill me if I made her move twice. So we serve a lot of clients who want to buy the target home, close on it first, know they've got a place to move to, then list their home. Now, it's more expensive to do it this way. The money is not cheap.
Yeah, but you know what? Divorce is more expensive.
Yeah, right. The gift that keeps on giving.
That's right.
Yeah.
So you can get, a short-term, no prepayment penalty loan. It'll cost you a note rate of 10% interest on average, but you're probably not going to hold that loan very long. It might be 60 or 90 days, but you can acquire the target property, the one you want to move into. Buy your house you're moving into first. Close on it with a hard money loan. It'll cost you 10% note rate, a couple of points. You just have to add that to the cost of the home. So when you're planning this all out, you just need to know and Otherwise, it's hard to stomach the cost of the financing, but it will work. We do it all the time. We use bridge loans for situations where people unexpectedly had their loan fall out and they still want to close because they're going to lose their deposit, or for people who strategically say, you know what, I'm going to use private money to buy the home because I can't get 2 bank loans at the same time.
Yeah.
And then I'm going to sell my home quickly, and when it's all said and done, I know I'm going to spend, well, if it's $1 million house, maybe you will spend an extra $20,000 on the acquisition, but you get the home you want, you don't disrupt your life.
That's the thing, yeah. It's too aggravating to lose out on the home that you really chose to, that you really wanted to buy.
Mm-hmm.
Patty, I have a question. Do you find that a lot of people use rent-back provisions in their sales contracts?
Very often. I mean, the seller wants everybody in the deal, including the seller wants a quick close just so that we know it's done. And then we do a 30-day rent back often.
And if the buyer really wanted to move in at the same time, you just kind of have roommates for a while.
Yeah, right.
Ted, Carol, and somebody
Yeah,
else.
Right,
exactly.
right.
That's right. Bob and Ted and Carol and Alice.
That's right.
I've literally seen it where one's moving, the movers are coming in the back door with the buyers and out
Really?
the front door with the sellers. Yes,
Wow.
it gets intense.
Boy, I was going to say, that can imagine that can get intense.
Wow.
So, Patty, if people have more questions about buying and selling at the same time or that sort of thing, or any kind of real estate question, how do they get hold of you?
Any kind of real estate question, I'm happy to navigate and counsel people through it. It's an emotional business. Patti Cohn, 415-722-4842.
You don't
Pacific Union.
you don't have psychiatrist after your name?
Yeah,
No.
I should.
Sometimes you
I
should.
should.
Yeah, I can only imagine. It's funny. Not trying to be sexist here, but I can see why a woman realtor can really be helpful because usually I'm a little bit more understanding, sensitive, and a lot of times that's what you need.
Well, I know in my own experience, and I was telling Patty before the properties that I've ever bought, I always felt that the real estate agent, the good ones that I have used, were psychologists.
Yeah.
Really, really skilled at
great.
holding the container and keeping it all together in a very incredibly stressful time.
Yeah. We have less ego in the game, and we really want harmony and to make it work together. We want people happy.
Well, yeah, especially that's how you get referrals. So.
Yeah.
Okay, we're going to cut to our third final commercial break. Before we do, just a quick little note here about Celtic Thunder playing at the City National Civic on March 3rd.
Sounds like a beer.
Yeah, no, you know what though? It's funny. Someone sent me a YouTube on this one time, and I checked it out. These guys are really good. Great harmonies and everything. So tickets are on sale at Ticketmaster.com. So check out their YouTube also. It's called Celtic Thunder. Not from Down Under, but
I know.
yeah.
Are they as good as Vlad and his
Yeah, probably. Okay, so that's on March 3rd, but check it out, Ticketmaster.com, Celtic Thunder. Okay, third final commercial break. Who was the first person crowned as Tsar of all the Russias in the 1500s? The first 3 callers with the correct answer to win. It was not Putin. The first 3 callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Who was the first person crowned as Tsar of all the Russias in the 1500s? Stay with us. The Best of Investing. I'll be right back.
I have a trivia question.
It's definitely a Google question.
Where does the word czar come from?
Oh, Tsar.
See, it stands for something, doesn't it?
It's it comes from the same place that the German word for Kaiser comes from.
Go ahead, keep take your hand off though. Let's see how.
Okay.
No.
You know what? It's funny because I think I heard someone kick something.
Well, I'm frozen in position.
Yeah.
Here.
Well, I did that, but it was over here. Kind
Yeah,
of
but
unrelated. Well,
because
obviously it's
I
related.
did tighten that bad boy up. Let me do this.
Not
here.
tight enough, obviously.
Well, Mark's bringing duct tape next week.
That's right.
Duct tape is-
See, that's
Yes,
shape just
Mr.
doesn't cut.
Kramer.
I'm amazed how fast this hour goes.
That was really bizarre.
It's all my hours. I wish my personal training hour was
What?
fast.
I know,
bizarre.
exactly.
It's bizarre than Tsar. That was very bizarre about the Tsar.
Yes, it was.
Hi, sir.
Now looking it up, Edward.
Yeah, no looking it up. Yeah, you guys too. No looking it up.
I don't.
I don't know. Hi, sir.
It's the old Latin word for Caesar.
Oh,
I actually
sorry.
took Latin. I couldn't. Right now it's all coming
that's kind
back.
of fun. Bring that up. That's kind of a neat little tidbit.
I already got enough people angry at me.
Okay. Any last things you guys want to cover specifically? What's going on in the
No
economy?
shaking your head in radio.
Yeah.
What can we talk about? We should probably decide before we start the fourth segment.
Well, people are always wanting to know, like, where are real estate prices going, and we can tell the,
Sure.
you know, the peak,
What's that?
what the peak was and what,
Oh, no.
where we
I
are
also
now.
want to know where real estate, where stock prices are going.
Yeah, I was
Michael?
Yeah, sure. We can have a little bit of, whatever. I'll throw something out in
Okay.
30 seconds, summing it up, and we can have a little free for all here.
Sounds good.
Especially now that we know that stocks are a much better investment.
Yeah.
I was like, wait a minute.
Wait a minute.
I'll take Bay Area real estate over the stock market almost any day, and as long as you're going to hold it for the long term.
Yep.
Shop right, and don't get a 0% down loan.
And then the leverage, and then the,
Exactly. The
yeah,
tax benefits.
tax
What about
benefits.
the first 250,000 being tax free?
Exactly.
Oh, yes. That's
Exactly.
a
See,
Exactly.
that stuff
or
is
500, you know.
And again, that you have to live somewhere.
Yeah,
So
and you
you're
gotta live
already
somewhere.
out whatever you would have been out for rent. So
9 minutes
Exactly.
and 14 seconds.
Thank you. 9 minutes. All right.
And, you know, return on what? I mean, if you're putting, you know, nothing down.
yeah, let's talk about where everything's going. Since we all know.
I know. Let's start there and say we don't know.
Yeah.
All right. So, Patty, I'll just get right into you then. Okay. All right, here we go. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hahn, Patti Cohen, and Mike Zablin. You have to look at you each one, or else I don't know who I'm talking to. Okay, third, final commercial break trivia question. Who was the first person crowned, this is, we're talking about evil dictators here, who was the first person crowned as the Tsar of all the Russias in the 1500s?
I don't know.
All of the czars that I know were named Alexander, Peter, or Nicholas. So I'll just maybe hope to God one of those is right. I don't know.
No, it was Ivan the Terrible.
Oh,
Yes.
Yeah, and in fact, one little story I heard about this rascal was he built a beautiful palace, right? And after the architect had figured it out, and done all this, and it was done, he decided to blind the guy so that he could never make another beautiful palace again. Nice guy, huh?
What a kidder.
Yeah, what a kidder. That'll definitely get your name, the Terrible, after anything.
Oh, that's
Patty, you've got a couple of interesting things you want to talk about?
Well, you know, everybody wants to know where our stock price is going, where our real estate price is going. The truth is, none of us know. But
mortgage rates, price of
Mortgage
gold,
rates.
price of gas.
Exactly.
Horse races.
Exactly.
Where's it all heading?
Yeah. Gravity. Where's my?
Yeah.
You know?
I saw a movie about that.
Yeah,
Anyway.
unfortunately, my tummy, the gravity's going the wrong way. Go ahead.
Exactly. So, in terms of a little perspective, we all know that real estate went down in the Bay Area, arguably 40 to 60%. Well, the peak of appreciation was May of 2013, where according to Case Shiller, 25.7% it went up that prior year. So that was the peak. Now, in December to December, it was 8.9% in the Bay Area. That's nice and healthy. And probably, my opinion, the next couple of years, 5 to 7%. I mean, this is nice and healthy. So, yeah.
Yeah, the rate of increase is definitely slowing down. That's for sure. And so, Patty, did you mean when you said the peak? Was that the peak of appreciation? Was
Yeah.
that nearly 14%? Okay, that
In the prior year.
right. In
Well,
13,
it
yeah,
sounds
30,
like
yeah,
his jobs are coming back.
yeah, between 12 and 13 and 14, that 24-month period of 2013 or 14, just an amazing price recovery.
Yep.
And it made us all, those of us who like to invest in real estate, made us all long for the good old days of 2011 and 12 when you could still cherry pick prices for real estate for great prices. But yeah, those were amazing
Well,
times.
a long time ago, when we first started the show back in 2000.
4.5 years ago.
Yeah, 10. We were talking, in fact, Ken Winans was with us, and he kept saying, you know what, the stock market's not going to go up until you get a recovery in real estate. And basically, it's right. Yeah.
Well, we can't discount the importance of the low interest rate environment as a factor
Yeah,
in pumping
major.
up asset prices too.
Good
Although
point.
it's you can't just say, well, that's the reason, because no one really knows what the future holds.
No, but that helps, though.
It clearly must help because
Yeah.
it makes real estate more affordable and makes the alternative bonds much less less valuable.
I mean, the problem you have now, or I don't know problem, but the analysis right now is that the way things are, if interest rates went up a little bit too much, everything would crash.
Yeah.
I mean, it would be worse than the Great Recession.
Well, what's interesting about that is that there's no historical context to say that that's what happened before, because in every cycle that you can go back in the last 30 or 40 years, every time interest rates went up, home prices also went up.
So you're calling me a liar then?
No, I'm just saying
You're
that
calling me ignorant. You're calling me stupid. What are you calling me, Mark?
there's a public fear that if real estate, if
Yeah.
mortgage rates go up, that will necessarily lead to home prices going down, and there's no evidence that there's ever been that correlation in the marketplace.
It's weird, but I guess maybe quote, common sense would say that people's income can only afford so much of a house, and if they're leveraged a lot, then the interest rates going up will severely hamper what they can afford.
But you have
Am I
to
wrong?
remember that during periods of rising interest rates, there was also usually periods of rising inflation.
That's exactly right. That's just it, and the need to get in now before it goes up even higher. So
And your dollars devalue even further.
So there's a lot of drivers that happen. So we never live in a vacuum where we just say, well, if interest rates go up, real estate prices will go down. Well, that's assuming that nothing else changes in the mix, but there's a lot
That's
of
a good
other
point.
things that normally change.
I mean, I
as
think a
result.
lot of it has to do with just the economy in general. Jobs are a major factor. When you have a lot of unemployment, I mean, you take it right off the table how much can be afforded.
Well, also, I'm sorry, Mark,
Go ahead.
if interest rates go up, they'll still be at historical lows.
Exactly,
True.
exactly.
Right. If they go all the way up to 5%, or God help us 6%, and that's
Which we must be at least 10 years away from, I would guess. But if they even went up from, you're talking about the 30-year. Yeah.
when I was being facetious when I said God help us 6%, because that's still historically a great mortgage rate.
Well, no, it's funny when you say historical. I mean, at what point do you say it's not historical anymore? Right now we're at historical
It's no longer historical; it's hysterical.
Yeah, but once it starts going up, that's not historical anymore because we're already in the low.
Yeah.
So let me ask you real estate experts here, is today a great time to lock in a 30-year loan?
Oh yeah, I think so. It's possible that we could have it. I mean, I was going to say bouncing along the bottom, but we had a bottom where it got as low as like 3 1/4 for 30-year loans, and now we're hovering right at that 4% level. And a couple of weeks from now, it may go back down below 4 again, and then it might hit 4, maybe go slightly up. We're kind of bouncing along as we're waiting for the Fed to raise interest rates. But meanwhile, there's other things happening in the economy, price of oil, that are affecting the 10-year. So it's really an unusual situation we have here, in that there really is a lot of disagreement as to where prices are heading in the future.
Well, if you think about oil prices dropping, how many how much of the economy is affected by that? The gas prices, the airplane tickets, which of course we talked about, I think it was last week, that they haven't quite gone down as much because there's other factors going on. It's basically it's supply and demand.
Supply and demand.
Yeah.
Well, I just saw gas prices in my neighborhood go up like a dime from a recent low, and that really aggravates me, because gas prices didn't really go down enough to reflect basically the 50% drop, from $100 to $50 a barrel. And now as soon as it goes up just even slightly, which it did, here we go. The gas station owners are all, we got to raise our prices again a dime.
Yeah, don't you just love that the government just says, we're just not getting enough in taxes now, so we're going to increase the taxes on it.
Well, it could also be, I think there are reasons such as refineries in operation or being taken out of service, or so they say. I'm not
So they say, right.
always gullible.
There's always a
enough to
good
believe
reason why.
what the oil companies tell me.
Yeah.
Or the government.
Who are they anyway?
Yeah, that's right. Who are they?
I think they're us. That's what I've been taught.
Are you the 1%er? No comment. Okay, we've got about 30 seconds before we get into our thoughts for the day. Mark, why don't you give out your information again in case people want to get a hold of you to earn 8% or more?
If you need to borrow money privately or want to invest money privately, give us a call. Pacific Private Money, 415-883-2150.
Patti, for real estate questions?
Any real estate question, commercial and primarily residential, Patti Cohn, 415-722-4842.
And Mike, real quickly, how do you
You
get a
can
hold of you?
reach me at 415-785-4585.
He's the guy with all the investment advice. All right, thoughts for the day. Never forget 3 types of people in your life. 1, 1, who helped you in difficult times, 2, who left you in difficult times, and 3, who put you in difficult
Difficult times. I love
And
it.
Isaac Newton said, we build too many walls and not enough bridges. Very good. All right, tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. Good.
Yay. Nice
All
and fast.
right.
Okay, who
Wrap.
said we have